Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for joining us. This segment is brought to you by CommercialAgentSuccess.com. It is the ultimate in commercial agent training. If you are a broker, an agent, or know someone that is, hey, get them a holiday present. Visit CommercialAgentSuccess.com. Well, today we're going to talk about retail. We're going to talk about sales. We're going to talk about what to expect for the holidays. Also, what's going on with online sales versus brick and mortar. How has retail been doing? What do we expect moving forward into the holidays here? Here we are in December 2022. And what do we expect for next year? Well, please welcome my guest. It's Mark Mathews. He's VP of Research and Development with the National Retail Federation. Mark, good to see you. Thank you for joining us, sir.
Michael, thank you so much for having me.
Well, great. Well, first of all, if you can kind of update us, there's been some, inflation and, just a lot of and interest rates really kicking up. Where is consumer demand and how have consumers been behaving through 2022? How are sales going?
As you say, things have been pretty complicated. There's a lot of different moving parts, and I think that's why, looking at next year is a real challenge because there are many, many different things that we need to understand. Now, the consumer actually remains in a pretty strong position. If you think about it, during the pandemic, consumers built up a huge amount of savings, $2.5 trillion. And they've spent some of that down, but most estimates are that, they still have about $1.5 trillion in excess savings. So the irony is that, if the pandemic hadn't happened, consumers would actually probably be in a slightly worse position than they are now due to the pandemic, due to the heavy fiscal stimulus and monetary stimulus that pumped about $10 trillion into the economy. Consumers have been spending. And for the most part, they've been spending pretty heavily on retail. So what we've seen over the course of the year is that retail sales were up about 7.5% over last year. Now, last year was a record year, and I think I probably talked to you about this on the last show we did together. We saw over 14% growth last year. So the amazing thing is that, we've continued to grow on top of that record growth. We forecast retail sales to be about 6 to 8% this year. We think that's a pretty good forecast. We also forecast holiday sales to come in the same range, 6 to 8%, and we're feeling relatively comfortable with that as well. So, the Thanksgiving weekend numbers looked pretty solid. So, we're hopeful that, for at least the time being, consumers will continue to spend.
That's amazing. So 6 to 8% increase in holiday sales over last year, which was a record year. Wow. Who'd have thunk it, right?
Yeah.
It is kind of surprising because consumer confidence is not that high, right?
That's correct. And, what we've seen is that consumers are not spending their feelings, they're spending their pocketbooks. So throughout the course of the year, we've seen very, very low levels of consumer confidence, and yet consumers have continued to spend because financially they're in a strong position. So they are reacting to, all the negativity we hear about, potential recession for next year, about inflation, all this stuff about Fed raising rates. It is having an impact on their psyche. They're worried about it, but they're continuing to spend because they still have those dollars in their bank accounts. And frankly, they're, overspending. They are reaching heavily into savings. Some consumers are going into debt. And that's the problem that the Fed is facing right now, because the Fed would love to slow inflation down, but that is hard to do when consumers are continuing to spend. So the real question is, is the Fed going to continue to have to raise rates because consumers continue to spend at high levels?
Well, I think the Fed needs to listen to me. They need to slow down these rate increases and let the impact happen, right?
Yeah.
To me, they're doing it way too fast, and maybe started too slow. But so, what about online sales versus in-store sales? This is America's commercial real estate show, so a lot of folks interested in what happens in the stores, but also commercial real estate's impacted by online sales as well. What are we seeing there for this year, 2022, and the growth in online versus and brick and mortar, and what do you expect moving forward?
Yeah, so interestingly, last year was the first year that I can remember where brick and mortar actually grew faster than e-commerce, which is a pretty amazing thing if you think about it. Now this year, e-commerce has sort of reverted to its long-term growth trend. You'll remember we had a big pop in e-commerce during the pandemic, but that has sort of settled back down to where you'd expect it to be. E-commerce continues to grow a little bit of faster rate than brick and mortar. Brick and mortar over the course of the year has grown at about 6%. If you think about overall retail sales growing at about 7%, you can see that a little bit more has shifted over into the e-commerce space. But I think it's really, really important to recognize that, looking at these numbers doesn't tell you a whole lot, and here's why. Because the area where we're seeing growth in e-commerce, so to speak, is in things like buy online, pick up in store, curbside pickup. And many companies will view these as different types of transactions. One company would view buy online, pick up in store as an e-commerce transaction. Another one would view it as an in-store transaction. So the data itself isn't highly reliable. And I really think that we had a lot of doom and gloom a few years ago about, the death of the store and, retail Armageddon and all that. And that obviously never came to fruition. We as an organization and, as an industry have to get away from this notion that, stores have to grow, same store, sales by a certain amount, and that's the only way that you're going to get value out of a store. I think there's a lot of recognition now that stores add a lot of value in other ways. Stores are becoming fulfillment centers. If you have a national chain of retail stores, you don't have to build out, warehouses across the country because you can fulfill from those stores. You also have to think about, the fact that many retailers are moving towards, a more of a branding approach to their stores. They're developing stores where consumers can come in and not just transact, but get comfortable with the brand and understand the brand values and interact with the brand. You also have to think about the advertising value of having, stores on, on Main Street. So there are many different ways to value a store, and I think all that is being rethought. So this notion that, e-commerce, if it continues to grow, means that we're going to have fewer stores, I don't think that necessarily holds a lot of water.
Yeah, well, that's interesting and makes a lot of sense. The branding, the advertising, and we want to feel part of our brands, right? Our brands want us to be involved with them. And with sales being so robust, retail sales out there, who is doing the spending as far as the family's income levels? Is this the lower income, middle income, higher income? Who's spending all this money?
Yeah. Well, we started talking about, a bifurcation of the consumer some time ago because, clearly the higher income consumers have had a better time of it during the pandemic. They were able to sock away a lot of savings. The lower income households were able to do so as well, but to a lesser extent. I think we've gone away from this notion of bifurcation to more of a stratification. It's changing based on many different income cohorts. So at the lower income, what we're seeing is actually not that much change, surprisingly enough. And if you think about it, lower income households, they have to, spend a lot of their money on, necessities. They don't have a lot of money that they're spending on non-essentials. They're not going on expensive vacations where they can cut back on and channel some of that money into essentials. So they are probably the most challenged. and much of their income is going towards purchasing essentials, and what little they spend on non-essentials, we've seen decreases there. In the more middle income households, what we're seeing is a lot of trading down and trading across. People deciding to spend less on maybe that organic free range milk. Maybe they're switching down to cheaper options. So we're definitely seeing the middle income households look to save money by trading around, and also by cutting down on some of those service expenditures. Maybe traveling a little bit less, staycationing as opposed to vacationing. And then at the higher income, actually, there's not a lot of change. The higher income households have done well during the pandemic. Their income levels have increased. They've socked away a lot of income, and I think that's why we see the higher income or the higher cost retail outlets, the luxury stores, the luxury brands, they continue to perform quite strongly.
So let's talk about that. We know what are the categories of retail and some of the brands that seem to be doing well in this market.
Well, I think, I prefer not to think about it in terms of brands, but rather, in terms of what you're selling, right? So if you are selling essentials as opposed to non-essentials, that is something that's helpful, right? We're definitely seeing people preference spending on essentials. We also have, brands where, if you're catering to the middle market, you're probably going to be slightly more challenged than brands that are catering towards the higher end, where they're more able to maintain that customer base, and that customer base continue to spend. And if you're again at the lower end, you're actually getting some traction by getting people who are trading down from the mid market into the lower end. So I think if we think about what's going to do well, I definitely feel like if you are, as I said before, if you're focused on essentials more than non-essentials, if you are focused on value, then you're probably going to be in a reasonably strong position.
It seemed like during COVID, people weren't buying very many clothes. Is that a category that's bounced back yet, or is that still weak?
Yeah, absolutely. We've definitely seen a bounce back, but we have seen a change in the type of spend. So, 12 months, 24 months ago, people would have been looking at, leisure wear, right? Stuff to wear around the house because they weren't going to the office. What we've seen now is that more and more people are going out there and buying office wear, right? And the fact of the matter is that, waistlines have changed during the pandemic, some for the better, some for the worse. And therefore, when you try some of those suits or, other office attire on, and you find that they're not fitting that well, you've got to get out there and make some purchases. And one of the things that we saw probably sell best during the Black Friday weekend was apparel. People are out there going and taking advantage of in a high interest or high inflation environment, the ability to buy heavily discounted clothing to support their changing lifestyle.
Yeah, I'm one of those ones who had to get different size clothes. I lost 40 pounds in the last year and a half. So really nothing fits. So I'm one of those guys out there spending. Yeah, and so what about some of the other categories like electronics and things? What do you expect for the holiday, and how are they doing so far?
Yeah, that's mixed, and we see a lot of things moving in the electronic space, right? There's a continued shift in electronic spending away from bricks and mortar towards e-commerce, which is essentially giving consumers the ability to shop around a bit more. That doesn't mean that some of the brick and mortar brands aren't doing well. There are definitely some brick and mortar brands that are performing well, not just in their stores, but in terms of e-commerce as well. But you have to remember that we bought a lot of electronics during the pandemic. People were buying laptops because they had to set up home offices and home schools and stuff like that. And maybe the replacement cycle for that hasn't quite come around yet. So we see sort of more mixed performance in terms of the electronic space. Some firms are outperforming, and one of the things you asked about what categories are doing well. One of the things that we face with high inflation and potentially a recessionary environment next year, it's the best operators, the operationally efficient organizations that tend to perform well during those circumstances. So there will be outperformers in some segments where the overall picture isn't that great, but they're doing well because they understand their customer and they're giving the customer what they want, at the right price.
Yeah, we're talking with Mark Mathews with the National Retail Federation about retail sales and what's been going on for the holidays and this year, and then what to expect for the holidays and into next year. So Mark, you mentioned on the opening, it's a little hard to look at 2023 as far as a forecast because of all the things going on with inflation and rising rates and consumer confidence. But what would you say? What do you expect at this point? What's your
It's a tough one. Certainly there's a lot of spending momentum out there. There's still $1.5 trillion sitting in excess savings in consumers bank accounts. So there remains an ability to spend. But there's no doubt that what the Fed is doing is going to eventually have an impact. We're going to see some softening of demand. The one positive is that the labor market remains strong. Companies are still hiring. There's still a lot of job openings out there. So the important thing is for the Fed to be careful here, because what you don't want to do is end up in a situation where you're over tightening, because that tightening doesn't happen straight away, right? So you're raising rates, but the impact is delayed, right? So there is a real issue where if the Fed over tightens and then the consumers have spent a lot of this excess savings, that you end up in a bit of a double whammy situation, and you could end up with not just a recession, but a recession that's potentially deeper than people are expecting. Right now there's still a way to navigate through this. So maybe we get a soft landing. The odds aren't great, in terms of ending up there. But I think most economists feel like if there is a recession, it should be short and not too deep. Hopefully we get a bit of a reset, and then we can start over again. With building up some growth.
Yeah. Well, what would you leave our audience with, Mark, related to retail and sales and brick and mortar? Maybe what would you say to landlords out there related to existing tenants or new tenants?
Yeah, I think if you look at what happened during the Thanksgiving weekend, we had record numbers of people out there shopping. The important thing to recognize is that shopping isn't just a transactional behavior. Shopping is entertainment. Shopping is tradition. It's something you do with your families. So we don't see any rationale for there to be any form of ongoing problems with stores. We think, as I mentioned before, that stores are fulfilling many different roles now. So we're pretty positive. Even as e-commerce grows, that consumers still need stores. They still want to shop in stores, and we expect that store numbers will continue to grow. We are at the highest level of stores we've ever seen right now. So maybe you could take the view that we're slightly overstored, but there isn't enough of a drop off in demand for any sort of correction, at least in the near term.
All right. Well said. Well, Mark, thank you for joining us, sir. And thank you for joining us around the country. Please let us know what you think. We appreciate you sharing the show and reaching out to us. So until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. Appreciate the show? Consider referring business or doing business with our sponsors. Bull Realty is a commercial real estate sales, leasing, and advisory firm doing business throughout the Southeast, headquartered in Atlanta. Visit bullrealty.com for more information. Commercial Agent Success Strategies provides video training for commercial agents. This training gets 5-star reviews from even the most experienced brokers. Learn more at commercialagentsuccess.com. You're invited to connect with us on your favorite social media. You can find us on LinkedIn, Facebook, and Twitter. Don't miss a show of special interest to you. Be sure and subscribe to the show on YouTube and Apple Podcasts. And at the show website, creshow.com, you can subscribe for a weekly email announcing the show topic and guest. While you're there, you also found more videos and podcasts. Thank you for watching or listening to America's Commercial Real Estate Show.